Can we see the board?
See here. See here. This is working.
Can we see the board now?
Yes, sir.
Yeah, Ipsas 17 is all about property, plant, and equipment.
Your computer.
What is it all about? It is a standard that is being put in place to know how to recognize and measure anything relating to property, plant, and equipment in terms of cost, in terms of depreciation, and in terms of fair value.
I'm hot, so I keep
In a
asking you.
general term, in line with IS 17, which is also in line with IS 16. Ipsas 17 is also the same thing as what? IS 16.
Okay.
This is basically concerned about the measurement, the accounting treatment for property, plant, and equipment that is non-current assets. That is how to treat fixed assets. In terms of the carrying amount and the depreciation. Are we together? Assets in this situation is basically classified into the following. Assets in this situation is basically classified into the following. We have the properties, which has to do with what? Land and building. They refer that as what? Properties. When we talk of equipment, any forms of machine, any forms of what? Assets that in forms of what? Machine that are not meant to produce, but that can be used to be able to achieve an organizational goals and objectives in terms of carrying out a particular job or activities or moving a particular property from one place to another. That is referred to as what? Equipment. In terms of what? Furniture, in terms of computer, in terms of what? Motor vehicle, all those ones are referred to as equipment. But in terms of what? Machine and plant, we refer those ones as what? Plant. That is how they came up with what we call properties, plant, and equipment. Now, let's look at it from the aspect of cost. Let's look at it from the aspect of cost. Or let's look at what? Definition of terms relating to this before we move down to other areas. What we call carrying amount. What is carrying amount? That is the balance of an asset after deduction of what? Accumulated depreciation or impairment. Accumulated depreciation or loss of what? Asset impairment. When you deduct it from the cost of the asset, what you are going to get is referred to as carrying amount or net book value. When you consider only depreciation, we refer it to as what? Net book value. When you deduct the depreciation and the what? An impairment of assets, then what we have is what we call carrying amount. What do we mean by what? Impairment. What do we mean by depreciation? Let's go to the next level. You said to know. Classes of what? Property, plant, and equipment means group of assets or similar nature or function in an entity's operation. That is the group of assets into different what? Classes or group based on their function. Is that clear? Or based on the nature of the organization. That is what we call group of assets into property, plant, and equipment. We also look at it, cost of the asset. What is the cost of the asset? We are looking at the cash that you have paid for the asset at initially or based on historical value. We can look at it from the fair value of that particular what asset. Let's look at what the book is saying. This is the amount of cash or cash equivalent paid or fair value of that order considered given to acquiring an asset at the time of its acquisition or construction. That is what you paid initially to acquire the asset. To acquire the asset. That is what we call cost. Now, we also meant to look at it. What are the things to be recognized when it comes to cost? Because I may not have the opportunity to discuss all this. In terms of the cost of the asset, what are the things to be recognized when it comes what? That is cost to be considered when it comes to what? Value of what? Assets. Being an asset of an organization, the purchase price is meant to be recognized as part of cost. Installation cost is meant to be recognized as part of cost. Transportation cost is meant to be recognized as part of cost. The training cost you incur in the process of introducing the asset into use is also meant to be recognized as part of cost initially. Any forms of administrative charges incurred in the process of bringing in the assets into the organization, such as what? When it comes to tariff or import duty that you are meant to pay, and other related what charges, such as what? Consular charges. All these are part of cost to be considered. Ordering, the cost you incur in terms of ordering for that particular asset, all those costs are meant to be recognized as part of cost initially. The preparation of the place where the asset is meant to be what? Installed in the process, that is also referred to as what? Part of initial cost of the asset. All these are meant to be measured as part of cost of asset when you are meant to acquire a new asset. Let's look at it from the depreciation. As depreciation is concerned, this is the systematic allocation of depreciable amount of the asset over its useful life. That is allocation of cost on an annual basis. The cost of the asset is meant to be allocated annually for its useful life or economic what? Useful life. We have different methods of depreciating an asset. We have what we call straight line method, we have what we call reducing balance method, and we have what we call sum of the year digit method. Are you with me? Under this, when it comes to straight line method, depreciation is calculated as cost minus scrap value divided by the lifespan or useful life of the asset. Taking for instance, if asset costs 20 million and residual value of the asset is 5 million and the asset is meant to use 5 years, the depreciation in that situation is 20 million minus 5 million divided by 5, which is going to give you what? 3 million. When we talk of depreciable part of the asset, depreciable part of the asset is 50 million. That is cost minus, depreciable part of the asset is equal to cost minus residual value. The result you are going to get is what we call depreciable amount of the asset. Residual value is the amount to be received on that particular asset in the future after the useful life of the asset. When it comes to other method, apart from straight line method, we also have reducing balance method. For the reducing balance method, that method considers the cost, initial cost of the asset, the net book value, and the depreciate Depreciation what? Depreciation rate. Depreciation rate. How do we calculate depreciation rate? Depreciation rate is equals to 1 minus nth root of residual value divided by cost into bracket of what? 100. The cost of the asset is meant to be considered. The residual value of the asset is also meant to be what? Considered. And the N is the number of year of the asset. That is the formula for calculating the depreciation rate when you are not given the rate of depreciation. Are we together? Hello?
We are not, sir.
Hello? Okay. Hope what I explained is well clear to you guys.
Yes.
No, sir, particularly this calculation of depreciation rate.
What do you say?
Calculation of depreciation rates.
Okay. Let me quickly say something here. I'm going to the end of this part. I'm coming back up later. This is what I'm saying. Let's look at it from what we call cost. Cost of non-current asset. That is property, plant, and equipment, PPE. We have purchase price, purchase price of the asset, transportation costs or carriage inward. Apart from transportation costs, we have what we call installation cost. Installation cost, transportation cost, installation cost, cost incurred,
Pick this thing on the floor. Sky. You don't need that step like that.
cost incurred in the process of training, the rest of what? Training the staff for the use of the asset, for the first time. Administrative cost incurred in the course of ordering for the asset. All these are costs to be recognized. Is it clear? Then let's look at it, depreciation method. We've discussed what depreciation is. Then what are the method of depreciation? Depreciation methods. We have one, straight line method. Straight line method. For straight line method, depreciation is equals to cost minus residual value divided by useful life. Then looking at it from another dimension, we have reducing balance.
Good afternoon.
What is that? Hello? Hello?
Hi, we can hear you, sir.
Okay. The next one is reducing balance method. Reducing balance method. For reducing balance method, depreciation is also calculated as this. Are you with me? You have the year, we have workings, we have cost, slash net book value, or they call it carrying amount. And we also have what we call depreciation at that level. How do we go from here? Initially, taking for instance, we have year one. How do we go from here? We have the cost of the asset, assuming it's XX. Then we have the depreciation. How do we determine the depreciation? Depreciation is calculated as the percentage you are giving times cost in year one. Anything you get is your depreciation. That will now be deducted from the cost, initial cost you have recognized. Then what you are going to get is referred to as net book value in year two. Net book value in year two. Net book value. That net book value will be the end result here. Then the next one will now be depreciation in year two. That depreciation in year two, how do we calculate it? That one is meant to be calculated on net book value, the percentage times net book value. Or carrying amount.
She's sleeping, was it?
What is she doing, sweetheart?
No, don't worry. Papa, she ate plantain. And she done drank. People are going to eat. Go and carry one of those two to one. Then let me come and give you soup.
Aisha, please mute.
Oh,
Hello? Hello?
Hi.
Any problem?
Continue, sir.
Now, this is how to go by this. Anything you get next is also referred to as what? In year three. Year three, that year three, we also have what? Net book value or carrying amount. Are you with me? Then how are we meant to determine depreciation rate? Depreciation rate is equals to 1 minus n truth. N might not get it clearly there. Let me try to put another thing that will make it more clearer. Then here will now be open a bracket R residual value divided by C, close the bracket. This will now be times 100, where where N is what? Useful life. Useful life of the assets. RV means residual value. C means initial cost. The last method that we're also meant to look at is what we refer to as weighted average. Weighted average method, or they refer it to as sum of the year, sum of the year's digits. Any question, please? When it comes to sum of the year digits, we are looking at the when we look at the sum of the year digits in this situation, we are looking at the number of years and the weight of the years of the asset, taking into consideration the residual value taking into consideration the residual value that is not meant to be considered as part of the asset. Simply means what you are meant to consider here. Okay, as we're saying, under this part, we are meant to consider the years of the asset to determine the weight of the year. Now, taking for instance, for us to be able to solve this particular method consider the cost of the asset, it consider the residual value and depreciable amount of the asset and the weight of the years of the asset in order to determine the depreciation for the asset on a yearly basis. How do we do this? What are the things we are meant to consider when it comes to this? Are you with me? Under this one, we of course consider the cost of the assets, we are meant to consider the residual value of the asset. We are going to less the residual value we are meant to less the residual value from the asset, from the cost of the asset. Then what we are going to get is what? Depreciable amount of the asset. That's how to determine the depreciable amount of the asset. This depreciable amount of the asset, if you are giving residual value, is what you are going to use to determine your depreciation using the following steps. Now, you consider the years of the asset, we consider the weight of the asset. Now get the depreciation. Now, taking for instance, an asset is having a 5 years. What are we meant to do? We now say we have what we call year 1, we have year 2, we have year 3, we have year 4, we have year 5. Addition of this will give us what? What is total of the year? From 1 to 5, you add it together, what are you going to get?
15.
15. That is the weight of the asset. In that situation, that is what we refer to as weight of the asset. We now come here to determine the weight, to determine the depreciation. We now say 5 divided by 15 times depreciable amount, DA, depreciable amount of the asset. Anything you get is your annual depreciation. That's the same thing you are going to do in year 2. In year 2 is going to be 4 divided by 15 times DA. Then anything you get is your depreciation for the year. In year 3, That one will be 3 divided by 15 times DA, depreciable amount of the asset. Then what you get is what? Depreciation. In year 4, that will now be 2 divided by 15 times DA. That gives you what? Depreciable part of the, that gives you the depreciation for year 4. In year 5, we have 1 divided by 15 times DA. What you get is your depreciation for that period. Any question, please? Any question? Hello?
Go ahead, sir.
Hello?
You can go ahead, sir.
Hello, sir. Please, I can't see your screen.
You can't see the screen?
Yes, I can't.
The screen that others, can you see the screen?
Yes, I can see your screen now.
Why you not saying you can't see the screen? I
I
didn't change
couldn't see
anything now.
before. I guess it was my network.
Eh?
Yes, I guess it was my network. Then another thing, I guess it was my network. Another thing, sir, this 15, please. I'm not sure how you got it because the network was messy around that time.
You don't do what?
I'm not sure how you arrived at this 15. Those 15.
How we arrive at 15?
Yes, sir.
I said you should add the years. Add the years, you will get that 15. Do you get it? 1 plus 2, that's 3.
Okay.
3 plus 3, that's 6. 6 plus 4, that's 10. 10 plus 5, that's 15.
Okay, then we now take the year 5 divided by the
5 divided by
total
what? By 15 times DA. That is depreciable amount of the
amount.
asset.
Okay, sir. Thank you.
What you get at the end of the day is the depreciation for that year.
Okay.
Any question? Any question, please? We've talked about depreciable amount. We've talked about what? Entity specific value. This is the present value cash flow from the asset. That is, when you look at the future what? Income, you can say that what is going to be the present value of the asset. If you want to earn what? Something on that asset. We also have what? Exchange transaction. There is what we call trading value of an asset. Trading value of an asset. How do you go about trading value? Trading value of an asset is when you exchange your assets with the old assets. Okay. Now, looking at it from this particular perspective, are you with me? You can exchange a particular property, a new property with the old property with additional cash. That is what we call trading value, which is exchange of what? Transaction. A transaction in which one entity received an asset or service or as a liability extinguished and directly giving a proximate equal value to that particular cash or goods or service. That is what we call the exchange. We also have the fair value. This is the amount for which an asset will be exchanged for or liability settled between a knowledgeable, willing party in an arm's length transaction. An impairment loss, a cash generating asset in the amount by which the carrying amount of an asset exceeds the recoverable amount. That is what we call what? Impairment loss. Then impairment gain, when the closing value of an asset is higher than the what? Opening value. By the time you look at what you can earn on that asset compared to what is the previous balance, is all about. If the opening balance of an asset and what you think you can earn on that particular asset presently at the closing is higher than the opening, we refer that as what? Impairment gain. But if it is reverse is the case, we call it what? Impairment loss. Any question? All these are meant to be recognized when it comes to what? Asset. Another area that you also need to have idea of before we look at what? Information to be what? Recognition. Look at it. Cost, recognition. The cost of an item or property, plant and equipment can be recognized as an asset if only it is what? Probably the useful economic benefit or service potential associated with the item. The cost or fair value of the asset can also be what? Measured reliably. Okay, how do we measure it? The measurement goes along with what? All what we have made mention of in terms of what? Cost. Now, all these are the information to be disclosed when it comes to what? Asset. Under what? PPE. We have the measurement. The measurement base used for you are meant to disclose what? The measurements you have used for you to accord to come about what? The initial cost, looking at it from the what? The residual value of the asset. You're also meant to look at the carrying amount of the asset method, the useful life of the asset. All these are meant to be disclosed in what we call asset register and what we also refer to as asset schedule. You might not have an idea of what is asset register and asset schedule. Asset register are documents of the asset that contain the description of the asset based on organizational what? Asset classification. How does it look like? Asset register. Hello? Hello?
Hello, sir. Continue.
Okay. When it comes to asset register, this is what we mean by asset register. asset document that contain the details of the asset. Details of the asset. What are the contents? Need to stay in it. Contents. Content of assets register. Content of asset register. What are the things you are meant to see in the asset register? We have what we call serial number. Serial number. Apart from the serial number, we have asset name. Asset name. Apart from the asset name, we have what we call asset classification. Asset classification. Asset classification. Apart from asset classification, we also have what we call useful life. Asset useful life. Asset useful life. Apart from asset useful life, we also have, apart from asset useful life, we also have depreciation method. Depreciation method. Apart from depreciation method, we have annual depreciation. Annual depreciation. Apart from annual depreciation, we also have accumulated depreciation. Accumulated depreciation. Apart from accumulated depreciation, we have what we call residual value. Residual value. Apart from residual value, if you don't call it residual value, you can call it scrap value or salvage value. Scrap value or salvage value. All these are what you are meant to see when it comes to asset register. Are you with me?
Yes, sir.
I was not see
The next one is what we call asset schedule. Asset schedule. Asset schedule. Asset schedule, this is another statement being prepared in order to know the current state of the asset. In order to know the current state of the asset, how does it look like? We have the asset. Assets. What are the assets we are referring to? We are talking of property. We are talking of plants. We are talking of equipment.
Hey, sir, I can't see what you're writing, or is it just my network? I'm still seeing some of digits.
Then the next one will now be total. Can you see what I'm writing now?
No, sir. Maybe it's my
Hello?
network. Maybe it's my network. I guess others are seeing. So you can continue, no problem, but I can't see. I'm still seeing content of applicant register. Can continue.
Then under here, we have what we call opening balance. Then addition of all this, of all the costs, opening balance, we now put at the total. I will have used Excel, but it might take time. Okay, do you know what? Let me open Excel. I will copy this and put here. Then we now copy it back. I will now forward to you. Is that clear? Is that one better? Hello?
Okay,
Is that
sir.
one okay?
Now we can see now. Can continue.
What do you say?
Okay, I can see now. You can continue. Thank you, sir.
I can't even hear what you are saying. No.
Sir, please, you can continue. Let me not distract the lecture.
asset register. Now, this is what we call asset schedule. Let's use this system to do it. You can have a perfect understanding of it. This is here. Plant is here. Equipment is here.
We can't see your Excel screen, sir.
Okay.
I thought it's just me.
Can you see what I'm doing now? Can you see the
Yes,
board?
sir. Yes, sir. Yes, sir.
This is the equipment. This is the total. You put it here. Now, after the opening balance, the next thing is addition. That is the new asset you have purchased during the year. After the new asset you have purchased, we have what we call asset reclassification. 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 After reclassification, we have what we call disposal. When you dispose assets. Disposal of assets. After the disposal of assets, are you all with me?
Yes,
We have
sir.
what we call evaluation. After evaluation, we have what we call closing balance. Put the naira value there. You put the opening balance of the asset. You put it there. You put it here. You also have another opening balance. Addition of the opening balance for property, plant, and equipment. You put it here. Total. Then when you purchase another asset, you put it here. Addition of that is also taken to this. Then when you reclassify asset, maybe you move a particular asset from plant to equipment, you will deduct it from that. and add it to the equipment. That's all. That one, plus and minus, you will not have anything here. Disposal. If you dispose any property, you understand, you less it. You less the cost of the asset from there. That's all. Revaluation. Any assets you revalue. If it is surplus, I will still explain that. If it is surplus, you add. If it is deficit, you less. Then addition of this, we give the closing what? Closing balance. That's the end of that. Then the next one, we put this one. We now come here, we have the depreciation. Depreciation and rates. With the rate would be in percentage. We put it here. Then we have opening balance for depreciation. We put it here. We put the total here. Are we together? We have reclassification. The same thing we have done here. Remove it from there. Less it. And take it to where it's supposed to be. That's all. Others are going to be. Disposal. We also let the disposal, the depreciation of that disposal you have charged, we are going to less it. Revaluation, depending on the situation, we now put in place current charge, which is the percentage of the depreciation over the closing balance of the asset. That is what will be your current charge. Then we now add everything together. Now closing what? Balance. Then you now come here, we have net book value slash carrying amount for 31st 12 XO XO1. Then net book value slash carrying amount 31st 12 20 x 0. This is what we refer to as non-current asset schedule. Non-current asset schedule. Any question, please?
Yes, sir.
What do you say?
Yes, sir. I have a question.
What's your question?
Please, I would like you to expatiate on reclassification and why is property not valued?
What do you say?
I would like you to expatiate on the reclassification and why is property not valued under reclassification?
I just picked that one as an example. Exactly. When you mistakenly add an asset to a particular group, which is supposed not to be so, you remove it from there and move it to the group where it's supposed to belong to. That's all.
Okay.
That is what we call reclassification.
Thank you, sir.
Is it clear?
Yes, sir. Thank you, sir.
Any other question? Any other question? Absent of no question, I'm moving it from here to that particular page where we were working before to continue with our explanation. Now, this is it. Any question, please? Any question? This is it in on our notes. I will forward this particular note to you back. Can you see it? Hello?
Hello, sir.
Can we see it?
Yes, sir.
Okay. Now, the next one now is asset revaluation.
Sir, please, we can't see your screen. Your notes screen.
Can you see the screen now?
Yes. Thank you.
Now let's look at it. Asset revaluation. Asset revaluation. Asset revaluation. This is the process of process of determining the new amount of an asset by using upward or downward revaluation model. When we talk of upward revaluation model, this is a situation where the where the valued amount is higher the valued amount the valued amount the value amount is higher than opening balance. Or book balance. The difference, the difference between the book, between the book value or the opening balance and the value amount is called what do you call it? Revaluation surplus. Revaluation surplus. What is the accounting treatment? Accounting treatment. What is the accounting treatment?
You debit the asset.
Now, in this scenario, say debit asset account with the surplus. Then credit statement of financial performance. That is income and
Expenditure.
expenditure statement. Now note where there is accumulated depreciation, accumulated depreciation on assets revalued. on asset revalue, you are to net of the you have to net off the accumulated depreciation from the valuation surplus. Any question? Hello, any question? Okay. Then when we now look at it from the downward revaluation, model. For this one, what are we meant to do? Are you with me?
Yes, sir.
This is another situation whereby the revalued amount is lesser than the book value of the asset or the opening balance. The difference is from evaluation deficit. Accounting treatment. Now, what do we do here? Debit the debit statement of debit statement of financial performance. that is income and credit the asset account with the revaluation deficit. Any question? Hello? Hello?
I
Any
can hear
question?
you, sir.
Any question? Can you all hear me?
Yes, sir.
Okay. Absent of no question from there, we need to look at it from what we call the solution, what do you call it? Asset disposal. Asset disposal. What do you mean by asset disposal? This is a situation where by an entity's asset, an entity owed asset is being offered for sales after its its economic useful life or usage. Accounting treatment. Accounting treatment asset debit asset disposal account with the cost of asset disposed. Credit asset account with the cost of the asset disposed. Are we together? That is treatment number 1. Number 2. The next one is depreciation account. Debit depreciation account with the accumulated depreciation of the asset disposed. What's the next one? Then credit ah, then the next one is to credit what? Which account are we meant to credit at this junction when we have debited the depreciation account with the accumulated depreciation of the asset disposed? We now credit disposal account. Credit asset disposal account with the accumulated depreciation of the asset disposed. Number 3. Number 3. What's going to be the number 3?
Bank or cash.
What do you say?
Said bank or cash.
Bank or card, thank you. Debit, bank account, or cash account with the proceed received, proceed received on the asset disposed. Then the next account, credit the asset disposal account. Proceed received on asset disposed. How do we determine what you get at the end of the day from this? We give you profit or loss on disposal. And there's a statement you are also meant to prepare in the process if you don't want to go this route to know whether there is a profit on disposal or not. How does the statement look like? We call it statement of statement of profit or loss on disposal. How do we prepare it? The first thing we consider now, the first thing we recognize here is what? Proceed on asset disposed. Now say we determine net book value or carrying amount. Here we consider the cost of the asset, accumulated depreciation, that's what we get at the end of the day. net book value or carrying amount. That's one here. Now let's see. When we less it, anything we get at the end of the day, it refers to profit or loss on disposal. Any question, please? Any question? Any question? Hello?
No question, sir. Continue.
This will be all area that you also need to pay attention to when it comes to staff. Seventeen. Any question? Any question?
No questions, sir. But sir, judging from the level of response, I guess everyone, I mean, most of us are tired already. If you permit, maybe we can suspend the class.
I want to bring
It's a
it back to
suggestion.
an end for now, but I just want to confirm if you get it clearly up to this extent.
We do, sir.
Okay. Thank you very much for part of this class. This is where I'm going to continue next class. In our next class, we are going to look at what questions regarding to all the area we have looked into in terms of the cash flow statement that I've discussed. I will look into that. I will look at calculation under the aspect of uh, Ipsas 13, which is on what you call list agreements and how to determine the account for the receivable and for the payable based on the question. When we shall be looking into this next one, all these are meant to be looked into. What possibility that the only question we are going to go through in our next class is very high. Thank you very much for part of this class. Have a
Thank
great,
you, sir.
wonderful night. I will call
Thank
this one to you. You're welcome.
Thanks.
Thank you, my dear. Who